Well, hello everybody. I am the Green Guy, as I'm known on Twitter and Stock Twits, and I'm going to go through some of the plays of the day here for you. So, the list is right there in front of you. CNET, GoPro, NQ, Textura, Apple, Tesla, Solar City for solar, and some of the major indices as you can read along there. And I'm going to throw in a little bit of the oil. And in the afternoon, we had some really fun stuff with Ford and GM really taking dives. And I didn't include that on the list because I made a double on Textura and I took like a scotch lunch and ordered a steak and had it delivered. So I had a little bit of a snoozer, I guess, because I didn't have too much more money I could throw at the market. I'd made my money and I was just sitting it out and just sort of passively falling. But I think that is going to be something to look forward to for the rest of the week. What happened today with Ford and GM could have major implications for a couple names. So let's take a look basically first at the major indices. That's always the place to start. Like I always preach, macro must come before the micro. If you can tell the direction of the macro, it makes your day so much easier. Catalysts that are positive on a positive day for the SPY will be lifted that much more, and negative ones on negative days, it's common sense. So if you can get a handle on the major indices and at least the trends, if not the daily trends, but the overall trends, it will help you much more. So let's go back again to mid last week. That's the point where we started to get this nasty, ridiculous chop that you can see right here. So last week, we had these couple down days, and then this insane chop started with, is this the beginning of a bear market argument? No, it's an up day. And then we had chop, 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 leading today with more chop. And I think the lesson to be learned is that we are in a chop market. We are not in a bear market, and we are in a bull market that is just declining with a slight correction is what I think we're seeing. This chop is not only a horizontal, it's not a horizontal chop, it's a downward chop. Follow the line there. And I think we're going to end up in the lower 190s because it's a good place to rebound from. The way the market has been can't sustain, and that is what you're seeing. You're seeing us be lifted by these little positive stories, and on days when there's not positive stories, it goes down. With as much as going on in the world, us being a global marketplace nowadays, we can't maintain an all-time high. You have Hong Kong rioting, you have the ECB saying that this economy is in recession, that economy is in recession, this one's got a horrible unemployment rate, etc. This one is lapsing. We have a Germany that's going into the winter here with that whole Russia situation with the gas line. It's going to be a crazy winter coming up. And I think a lot of people are expecting the future part of that as well. But you have to really keep in mind that all this crap is thrown into one pie and smushed out, and that's what comes out in the SPY. So today, when you have horrible news like the Hong Kong riots and UK saying that their GDP is supported by prostitution, if you missed that article, go back and read it. It was fantastic. But these things will come out. So today was actually a pretty easy play on the indexes. I missed the fact that today I could have done quarterlies, and that would have probably led me to play the indices. I thought it was a normal Monday for the weeklies, and I missed that, and that was my fault. But at the same time, there were so many plays today, and I made my double. But there was actually a quad to be made in the SPY if you would have bought and just written it out. Nonetheless, the point is the overall view. The thesis is there. The IWMs and the Qs, you always got to keep your eye on. They are leading the SPY and the Dow, and not vice versa. SPY will show some resistances. It'll bounce off the pre-market levels, so you have to keep an eye on the pre-market levels, but the IWM and the Qs are what they are. They're going to lead this thing up or down. And the Dow is just like the SPY. They're in the passenger seat, just waiting for the ride. All they can do is make the car pull over and get a soda once in a while. That's the way it's going to work. TLT is of note. The futures on the TLT, the treasuries here, are really bearish. So I think we're going to see a bit of a surprise. That's what people are betting on. And I'm actually in the boat with them. I think that the Fed is trapped, and I think that if they wait too long, our economic data is going to get bad, and they're not going to be able to change interest rates. So I think we're going to see a surprise in the interest rates, and people are starting to bet on that, which is interesting. So keep an eye on that. The TLT itself and the futures are good measures of where the interest rates might fall. And no, U.S. oil. So here's something that's really interesting, is the double bottom that's happened in oil and the apparent little rebound that we've had off it here. You see double bottom, 1, 2 there, 2 touches, and then off. So I think the interesting thing for this in my mind, because I don't play the USO, but I do play solars, is that rising oil will cause people to value alternative energy higher. So if you're one of the people like solars like me, Solar City for Solar CSIQ, that is one part of that pie that gets cooked. I would keep an eye on it, and we could see the solars heat up here, which have been stinky as of late. And that would just, it's a good play when it comes around if you can identify that. And look out for catalysts, because this could be the start of something for other sectors like that. CNET is the first one here that we're going to go through. And where did I put my scotch? There we go. All right, so CNET. This play is a little educational more than it is a call. I had no position, but it is basically a lesson in shorted stocks that are shorted to the bejesus. Anytime that you make a play on a stock, like CNET, always check the short interest every damn time, because stocks that are highly shorted will go crazy. CNET here, and if you haven't heard of the regulation SHO, NASDAQ publishes the list. Regulation SHO is basically something that was launched 2005, and I think they updated it in 2008 and 2010 along the way. It limits the amount of short selling that can happen on certain stocks, so that you can't have too much short selling and not enough shares to fill it. CNET's on that list, meaning that it's been shorted to the bejesus, which is why you're seeing these crazy runs in the play. It's so volatile. You can't short it anymore. So what you're seeing is somebody try to manipulate the stock, essentially, is what you're seeing. Short squeeze the crap out of somebody and run it way up. That's what this is probably just pure manipulation. I didn't see any news catalyst. I think it's just one of those plays. But whenever you get into a stock like this, always keep that in mind. These little tiny baby stocks can have surprising movements like that. GoPro is insane, and everybody's thought so. Where do you start on GoPro? I'm the kind of guy that I was, I think, raised in my childhood to be a value type investor. I think most people are. It's more conceptual. So when we see a growth stock, it doesn't make sense to us. How do you evaluate GoPro? They have a stupid little camera that points itself at narcissists, as their CEO states. And that's a valuation of this. It's incomprehensible. The lesson to be learned is that it does not matter, the valuation. It's secondary to this stock, being what it is, which is an anointed stock. What is an anointed stock? Good question, green guy. Anointed stock is a stock that hedge funds use to keep themselves in business. That's the short of it. They usually start about this time of the year, because at this time of the year, you can pick a stock, run it up through the rest of the year. Basically, you just buy the dip, buy the dip, buy the dip. And at the end of the year, what you have are customers that see that you've taken a stock and it's given you insane returns, and they don't leave your hedge fund because they think you're a genius. That's what an anointed stock is. And it's an old trick that's been around forever. It was actually labeled out in a book in the 1920s on Stock Market Manipulation 101. And it's been a classic ever since. Netflix was a anointed stock last year. If this was about the October month there last year, these beautiful channels form out of anointed stocks. Valuation has nothing to do with it. Again, Netflix this time last year did not have a partnership with Comcast. They did not have the European expansion out yet. They had a very questionable future in profits, and Amazon Prime was launching. They had a lot of issues to come up against that were the valuation was insane, but that's what a growth stock that is anointed like this will do. Same thing with Pandora. This time last year in October, you can see it very clearly here on the chart. Beautiful channels. And, interestingly, this time last year was when Pandora was, you can see it right there, $8. Isn't that hard to imagine? Pandora was $8 at one point, a sensible price. It was the same price as Groupon back then. And, Pandora, it's taking over the radio waves. I mean, how can you argue with that? It's taking over. But at the same time, it was always nonsense. As anointed stocks always are nonsense. And they always have an end. So basically, at the end of the year, when taxes are due and when people look at their portfolios and they say, you're a genius, and after that, guess what? Let's take some profits is when they always take the dive. So that's when common sense kicks in. Can you believe Pandora was up to 38? I mean, there's no sense to it. Don't try to make sense to it. Lesson be learned, don't short GoPro. NQ. This is another interesting stock. They might go private. I'm following it because I think it could become like a BlackBerry-ish type play where they have this private valuation and then maybe they can get something going from there. But then again, their business model is so questionable and they've had so many fraudulent claims in the past. I'd have to read quite a bit more and get a really juicy catalyst, I think, before I jump into it. But it is on my radar, and if I were you, I'd keep it on your radar also. But yeah, it had a beautiful day there. Textura is the one that I caught that was had a beautiful fraudulent article come out, say basically the valuation's insane, they've lied to investors, they lost their Chinese patents, their core business model is not existent anymore because of the patent issue. And why are they not valued at $4? Because that's what we have them valued at, and that was the start of it. So if you've never heard of Citron, that is, if you're long and you see a Citron report, dump, because it is almost always bad. Andrew Left, if you haven't read about Andrew Left, he is hilarious. Go through his history. They got a Wikipedia page on the guy. He pays something like $10 million a year in alimony. Because he married a divorce attorney. Interesting story. She got married in California, but did everything but sign her wedding license. And the state of California doesn't count that as marriage. So lesson be learned, never get married to a divorce attorney. That's the second one to learn out of this. But the action was actually beautiful in Textura. It went down about 15%, which is pretty typical for a fraudulent story to come out. And then it had a rebound, as usual. After the shorts have all gotten in their positions, you're going to see a short squeeze because there's manipulation, as always. This is when I got out. I got my double. I trimmed and I trailed. If you haven't heard of the trim and trail, cost basis. If I put $100 into this play and it was suddenly at $200, I'm taking $100 out, which is how much I put in, so that I, at very worst, am dead even on it. That's a trim and trail. And you can trim and trail to varying degrees, but that's a full cost basis takeout. I'm expecting it down below 24 again. That's just the history of these kinds of stock. Apple should be on your alert watch because Apple broke out of its channel here, has been bouncing off, and they have the Bendgate story and the iOS 8 horrible stories coming out. And it's worth following. Now, Tesla, SolarCity for solar, Ford, and GM should be on your radars. Ford had this nasty story coming out today when I was in my Scotch stupor, basically that what's going on with our North American sales? They're horrid. Our guidance is now lower. Waterfall. And GM following in suit. And you have this ugly chart with Tesla to begin with. See the trend line down. SolarCity is correlated so strongly with Tesla nowadays, since they're joined to the hip, that it's going to follow suit. But you also have the possible positivity from the oil thing. So I think there's some interesting plays that could be developed out of some of these movements. Ford and GM almost always correlate with Tesla to some degree. And they're worth keeping an eye on. But I am running out of time here. Anyways, I'm going to go watch some football and probably have a beer or two. I hope you guys enjoyed following me today and made some money. Keep me on your lists. We'll have some more stuff out there.